Welcome to Business Morning. I am BC Adebayo. The volatility at the crude oil market continues after markets were spooked by surprise comments from White House trade advisor Peter Navarro, saying a hard-won U.S.-China trade deal was over, although he later said his comments had been taken out of context. Jangled nerves were also soothed to some degree after U.S. President Donald Trump later tweeted that the China deal was fully intact, adding that he hopes that China will continue to live up to the terms of the agreement. But looking at the prices now, Brent crude took a 0.3% dive earlier on to $42.95 a barrel after earlier skidding to a session low of $42.21. U.S. oil was down 0.37% at $40.58 a barrel. Tensions in the Middle East also lent some support to oil prices. More headlines now. The Economic Community of West African States has endorsed Nigeria's former Finance Minister, Dr. Ngozi Okonjo-Iweala, for the position of the Director General of the World Trade Organization. ECOWAS, in a document expressing its support, calls on other African and non-African countries to support Dr. Okonjo-Iweala due to her fearless reforms during her tenure as the Minister and Managing Director at the World Bank. Dr. Okonjo-Iweala was nominated by President Muhammadu Buhari in June for the WTO top job, but has faced opposition from Egypt and the African Union. The WTO had confirmed her eligibility to run for the office of the Director General over the weekend. Meanwhile, Dr. Okonjo-Iweala, in a tweet, has thanked ECOWAS for supporting her candidacy as WTO DG. Meantime, the federal government says it plans to carry out a simulation trial of domestic flights at the Murtala Mohammed International Airport in Lagos on Saturday, June the 27th, in preparation for the reopening of commercial flights in the country. And the Minister of Aviation, Mr. Hadi Sirika, who made this known at the briefing of the Presidential Task Force on COVID-19 on Monday, announced that flight trials will be demonstrated ahead of the resumption of flight operations. And this comes as the Director General of the Nigerian Civil Aviation Authority, Captain Musa Nuhu, mentioned at the Stakeholders Forum that the NCAA would submit its aviation restart plan to the PTF on Wednesday, June the 24th. Meanwhile, the chairman of the NCAA COVID-19 committee, Mr. Godwin Balang, says the aviation regulator had to develop aviation restart guidelines on uncharted grounds, adding that it issued regulations in compliance with the International Civil Aviation Organization standard and recommended practices. And the National Economic Council has called for immediate technical and financial audits of electricity distribution companies in the country ahead of the intervention by German industrial conglomerates Siemens and other institutions. In its report, the next ad hoc committee on ownership review and analysis of DISCOs and electricity sector reform hints that urgent measures such as recapitalization of DISCOs, firm implementation of industry rules, contracts, and the insistence on sound governance principles that improve performance were needed to revamp the sector. The committee further explains that the challenges facing the country's power sector include non-implementation of cost-reflective tariffs, misalignments between the investors and, of course, the Bureau of Public Enterprises on required investments in DISCOs, underinvestment in infrastructure, and poor implementation of rules and contracts. The government and Siemens AG in July 2019 had signed a letter of agreement on the Nigerian electrification roadmap to improve electricity generation in the country to 25,000 megawatts in 6 years. And lending institutions in the country have asked bank customers to be more cautious in their transaction across electronic payment platforms available to them. And this comes amid widespread reports that bank fraud cases are increasing since lockdown was introduced to curb the spread of COVID-19 in the country, as more customers are adopting electronic means of payment. In response, several leading lenders have sent emails and text messages to caution members against revealing their bank verification numbers automated teller machine card number pins, as well as mobile app activation code password. The banks have also asked customers to disregard calls or messages claiming to represent the bank while requesting for their details of their accounts, passwords, key banking details, or other related form of identification, as it's readily available to the bank via its database. Now, let's talk about the currency market now, which has witnessed a lot of pressure lately owing to lots of demand of foreign exchange. Yesterday, the Naira strengthened at the I&E window by 0.1%, trading at 386 Naira to the dollar, while it was flat at the parallel market to 455 Naira to the dollar. But why is there so much difference between the official rate and the BDC? Now, to give us some of the answers is the president of the Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe, who's here with us in the studio. Many thanks for coming on the program, Mr. Gwadabe.
Good morning.
Good to have you here.
Yes, my pleasure.
The CBN has stopped supplying FX to BDCs in the past 2.5 months. So how have you been able to source for FX for your businesses?
First, I want to share the concern of the central bank and even the committee on the economic growth plan, where they have even suggested for a unification of exchange rate. Since the lockdown of airports, the airport was shut down in March. And since then, the entire BDC subsector window was shut down because our sources include the IMTSO, the International Money Transfer Operators, which is through the banks, and then, of course, the travelers that are coming from abroad, the working customers, autonomous for 2-3 years now, autonomous transaction, that sources from banks have been cancelled. So if you look at it, all the sources are not there. So that is why there is liquidity crisis. So, and these are some of the reasons the pandemic have really caused supply disruptions. The price of crude oil has gone down. Even the supplies abroad has gone down, no demand entirely. There are times that we are even paying for the stock we have on board the sea. So a lot of sources of foreign exchange have really dried up, not even to the BDC sector, but to the economy generally. So, and once there is liquidity crisis, so you see some certain behaviors in the economy. These behaviors include even the portfolio investors who happen to be doing capital flight. They are offloading their assets, their local asset, to convert it to foreign asset to a safer destination in court. So that has fueled pressure in the retail end of the market. Also, don't forget a lot of loans, foreign denominated loans by Nigerians, foreigners from the Nigerian banks. And what that means, anytime there is a variations in exchange rate, your portfolio must go down. So you have to act fast to make sure you get the necessary liquidity to put so that you can service your debt. 3, Nigeria is an import-dependent country. Yeah, we must appreciate the backward integration being put in place by the federal government and the Central Bank of Nigeria to encourage agriculture. However, our import bills remain high in food, remain high in petroleum product, remain high in medical. In fact, you can't believe it, the hospitals, as we talk, they cannot even raise $3,000-$5,000 to repair their ventilators, to show you how bad it is. And of course, to the school fees. Recently, 2 months ago, the CBN have come back with their sales to the banks, selling about $100 million to service school fees and medicals and what have you, but we are still seeing pressure. You see, the pressure is mounting on the retail end of the market. I just see you have shown IE Wendu at 386.6, while the parallel market is doing at 357.5, 358.5 as at this morning. So you can see there is a devalue, 458.5. So the Naira have devalued over 30% in the parallel market. So it's a big concern. These are the behaviors in the market. And a lot of Nigerians are even converting their local asset into foreign asset. People prefer now, there is no more confidence in the local currency. So this is the situation. People want to keep, even if it is 1 million naira in dollars, want to keep naira. People are withdrawing their naira from their account in the bank to convert it to dollars. People are selling their product in the shop to convert it to dollars.
But why is everyone converting their naira to dollars? I mean, there's reduced
95%
activity.
of
People
Nigerians are now
so
viewing the change. I'm sure you are even one of them.
No, I'm not one of them.
Are you sure?
So
if I should check your domiciliary account, I know it must be increasing in dollars. So this is the problem that we are facing. You see, it's currency crisis. Currency crisis devalue your asset. So, and there are a lot of information. People get free information. It's before that people don't have information. Now they know where the market is driven. And foreign exchange market is solely dependent on information. So if I have an information that this is where the exchange rate of the naira is going, and I have local currency, for God's sake, what am I waiting for? I will jump into speculation. I will jump into hoarding. So these are the economic behaviors we have been witnessing, and there is fueling a lot of that disparity in the parallel exchange market.
Now, talking about that disparity now, of course, you talked about the calls for unification of the exchange rates and, of course, to bridge the gap.
Right.
So I'd like to ask you personally, what's your view about the unification of the exchange
Even
rates?
though I'm not a student of devaluation, I still feel no country allow its currency to fall freely. However, we are all in new normal. The unification of rate is not new. Even have tried it in 2016 when they introduced the IIE window. It's all about unification, from the official rate to a more market determined rate. We have seen that. That have stabilized the economy for 4 years without hearing any issue about exchange rate volatility. So it's a paradigm shift from static exchange rate to a flexible exchange rate regime. It's a new normal. I came here with my marks. So even the policymakers have to think outside the old wine bottle to a new wine bottle. We cannot be having same product with different prices, especially now when there is liquidity crisis, when there is foreign inflow crisis. The investors are checking out. The crude oil sale is down. Diaspora remittance is going to be affected by 20%. So there must be unification so as to remove. There is a lot of, criticisms on this multiplicity of exchange rate. There are a lot of questions about transparency, distortions, resource allocation. So if all the rates are unified, all this cynicism around the exchange rate we automatically remove. And you cannot see the opportunity for rent seeking because these various exchange rates are only giving birth to rent seeking, to speculation, to hoarding. So, and all these are not genuine economic activities. You cannot be holding dollar. You cannot be speculating without adding value to the economy. And you think you are doing a very good economic activity. So unification will remove that, will increase the confidence of the investors. For me, I don't even see foreign inflow coming that will receive as even the solution to our problem. Because it's not going to come now. Every country, every investor is holding his funds because of the pandemic. So we should look towards other sources of foreign inflow. We should think outside the old wine bottle to a new wine bottle. This is a creative destruction period. We need to look into our diaspora remittances. What are the challenges? Why are we not receiving the exact $29 billion into the economy per annum? This is far more than the receipt of crude oil. So the government should give emphasis. I'm happy the National Assembly, the Central Bank of Nigeria, the NITCOM, Nigerian Diaspora Commission, they're all putting their head together, calling stakeholders to provide solutions so that we can deepen. This is money that is cheap, is constant. We received $29 billion last year, according to IMF. We are only going to get it fall by 20% according to their predictions. So what is 20% of $29 billion? Is it $6 billion? So which means $23 billion still going to come to this economy in this 2020 during this crisis, coronavirus. It's cheaper. So for me, I will even advise the government to even encourage diaspora remittance. Instead of us taking IMF loan at 3-5%, let's tell our Nigerians, bring your money, we'll give you even interest at 2%. Yet you're converting it to naira as an incentive. This is the money that will stay in this country. Tomorrow, if there is another corona, before you know it, the IMF will be calling back its own money. They will put us under serious pressure. The rate will scatter. The issue in exchange rate is not even the value, but the spike, the volatility. You cannot plan. Tomorrow is 450. Next tomorrow is 458.
So
yesterday is 370.
I was just going to ask that, how are these rates being determined, especially now that, of course, you can say that level of business activities have actually reduced because of the pandemic. I mean, the airports are not open and all. So how are these rates being determined? And of course, the CBN has not been supplying your members. So how are these rates being determined?
Supply have reduced drastically into the market. Yes, we said people are not traveling. But I have told you, right now there is about $3 billion waiting for the market to fully open so that investors can take their money out. Hospitals are still working. Students are still in school. Parents need to send money for upkeep. So a lot of demand is coming. People hoarding, speculation. In fact, for me, it's not even the usual Adam Smith invisible forces that determine market rate. I call them evil forces. The evil forces are more of the invisible forces in determining the exchange rate at the foreign market right now.
Who are these forces?
Who are the invisible forces? A lot of one. I said speculation. I don't know. Maybe you buy $500 now, you keep. It's evil. Why are you keeping? You have a shop that you are buying to sell more, to make small profit. You stop. You close the shop. All the sales you converted into dollar, waiting for government devaluation so that you come and you bring it out and sell. So these are some of the certain behaviors we are seeing in the economy. And until we can assure liquidity in the market, then that is when everybody will sit tight. Because once there is liquidity, definitely those involved in those kind of illegal economic behavior will definitely burn their fingers.
But do we know when the CBN is likely to resume sales of forex to BDCs?
I think the CBN are quite eager, even than the BDCs, to resume to business because they have already identified, recognized the roles of Bureau de change in terms of ensuring closing the gap. We have done it in 2006. We have done it in 2015. From 2016 to 2020, for 4 good years. These are the roles the BDC have been playing into the economy, ensuring liquidity to the retail end sector. You want to buy $500 to pay for your subscription abroad as a journalist, you don't have issue. You come to a Bureau de change and source it. So once the liquidity returns, and the CBN have written to us that they are preparing, unfortunately, you see, it's out of their hand, it's pandemic. All over the world, we are having fear of even another lockdown from what we are hearing because of the increase in numbers of the infected persons. But I think my own solution to this, the CBN already have given the banks a window to increase liquidity, to sell medical and school fees. Since it is also scope of the BDCs, which too the CBN should look into on how they will start a minimum sales to the BDCs. Once that information is there in the market, we announce BDC, come and access the IMTSO window, weekly, so amount. I'm assuring you, you can see the magic. In fact, we beat the invisible force.
We're all waiting to see that happen. Thank you for coming, President of the Association of Bureau de change Operators of Nigeria, Mr. Aminu Gwadabe.
It's my pleasure. Thank you for inviting me.
All right, our attention would shift to the domestic commodities market as well as the Nigerian debt capital markets when we return in just a moment. Please stay with us. Welcome back. Now, let's switch gears now to the domestic commodities markets with a research analyst at the financial derivatives company, Desola Sumoni. Good morning, Desola. Thanks for joining us on the program. Now, oil prices were volatile last week, and we're seeing the volatility persist this week. What do you make of oil markets at this time?
Thank you for that question, BC, and thank you for having me on the show. So it seems as if oil prices now found a new normal at $40 per barrel. We are seeing support for oil prices at $40 per barrel. However, there are like opposing factors that are driving oil prices at this time. On the upside, we are seeing stronger commitments to the OPEC production cuts. We are seeing sharper declines in exports from Russia. We're also seeing, this week Iraq is supposed to set out plans to demonstrate their commitments to the OPEC production cut, which is going to be closely watched by the market. They're also going to set out plans to make up for the couple of months where they did not comply with the OPEC production cuts. We're also seeing a decline in oil rig count coming from North America, the US, and Canada, which oil rig count simply signals future supply. So we are seeing a reduction in oil rig count. So all these factors put together, are pushing oil prices forward, upward. But on the other hand, we are seeing resurgence in cases, in coronavirus cases. Last week we saw in the United States, in China, in Germany, and most recently in South Korea, huge resurgence in cases in these key economies, which is raising fears about a second lockdown and the potential impact that would have on economic recovery and the demand for oil. So we're also seeing the potential of new supply coming online as oil prices are increased. So these factors, contravening factors are keeping oil prices stable around like $40 per barrel with mild volatility. So going forward, we expect that if oil demand continues to grow at the current pace, as more and more economies open up lockdown and there's more and more demand for oil, and we don't see a resurgence in coronavirus cases in these key economies, then I think that oil prices will trade between the range of $45 to $50 per barrel.
Now, the COVID-19 lockdown implies that demand for crude oil and natural gas has taken a beating amid a supply glut. Now, what does this imply for Nigeria's LNG export earnings, which actually accounts for about 11.3% of total exports?
Right. So it's interesting to know that Nigeria's LNG export has actually remained resilient despite the coronavirus pandemic. Data from S&P Global Plus showed that Nigeria's export of LNG for the first 5 years of this month declined only about 4% year on year, and which is quite good. It shows that exports is robust. And now the challenge is on the demand side. Now Nigeria is one of the oldest and one of the biggest suppliers of LNG to Europe. Now in Europe, first of all, we saw a milder than expected, a warm winter essentially, which reduced demand for LNG. So already we're seeing a slowdown in demand growth. Then a lot of economies locked down because of this coronavirus pandemic, which further dented demand for LNG. So what we have right now is a situation where there's a lot of supply. There's huge supply coming from Nigeria, coming from West Africa, but there's nobody to buy it, particularly in Europe. We are seeing that a lot of buyers in Europe are actually deferring buying LNG or even totally refusing to offtake LNG. So we have a situation where a lot of, some analysts even estimate that about 50% of all LNG cargoes on the sea contain Nigeria's LNG, which is a recipe for price decline. So think of it. We have tepid demand, first of all, coming from a warm winter, then the impact of coronavirus pandemic. Then we have huge spike in stockpiles with a lot of vessels containing Nigeria LNG lying idle at sea. Then we have Nigeria still exporting huge amounts of LNG. So all these factors point to the fact that the LNG prices are going to dip further, and already LNG prices are down 22% year to date. So our expectation is that prices are going to go down further, and it has huge implications for Nigeria's export revenue in terms of LNG. Like you said, LNG accounts for about 11-12% of Nigeria's export revenue, and last year this was about I think 1.3 billion US dollars in terms of revenue. So that is expected to take a serious beating because of the factors I've mentioned above. So we expect that export revenue from LNG is going to decline. But I don't know. I can't give you the magnitude, but we expect export revenue from LNG to decline.
We'll see how that goes. Now, another issue is the fact that while the Dubai International Airport has reopened for full international flights, now Nigerian airports, on the other hand, remain closed. So how do you think the closed airports would affect the Nigerian economy, and what's the future of international flights post-COVID-19?
So Dubai, one of the mainstays of the Dubai economy is tourism. So it's they needed to get their airports ready. In fact, I think they are open for tourism business on July 7th, I think. So what has happened is Dubai Airport was able to, prepare their airlines and the airports for a COVID secure travel experience. In Nigeria, Nigeria's airport was supposed to open on June 21st, which was Sunday, I believe. But because of various levels of unpreparedness, the opening has been postponed. Now, and that's already the impact of COVID-19 on airline industry globally has been significant. Even in Nigeria, the report from the Ministry of Aviation showed that already the Nigerian economy has lost about 69 billion naira from COVID-19 pandemic, which comes down to about 21 billion naira monthly. So the impact has been, in terms of revenue, the impact has been severe. In terms of job losses, a lot of people have already lost their jobs in the aviation supply chain because of the COVID-19 pandemic. And the people who did not lose their jobs, they experienced cuts to their salaries. So already the impact is severe, and it is not surprising. I mean, if you look at data for airline travel, international air traffic declined by 90% in April alone, and this whole Q2 is projected to decline by another 90%. So it's significant. So I think the effect on the economy is quite huge, and I think there are plans by the government to rescue the airline, the aviation sector, because at this time I think that's the only way they can get out of this pandemic alive.
All right, research analyst at the financial derivatives company, Desola Simoni, thanks for your time.
Thank you for having me.
We're still talking oil prices. Now, let's just do a quick recap of what we saw this morning. And the volatility at the crude oil market, of course, continues. And the markets were spooked by surprise comments coming from White House trade advisor Peter Navarro, who said a hard-won U.S.-China trade deal was over. But later, he said his comments were taken out of context. Well, we saw the prices going, talking about Brent crude prices this morning was down 0.3% to about $42.95 a barrel. And that was after skidding earlier to a session low of $42.21 a barrel. And U.S. oil was down 0.37% at $40.58 a barrel. Tensions in the Middle East also lend some support to oil prices. Now, the Nigerian debt capital market is increasingly becoming a viable source of long-term funding for both corporates and governments. There have been recent listings from Flour Mills of Nigeria, Primero PRT, FBN Quest Merchant Bank, as well as the federal government. But let's find out what's driving this development with the head listing business division at the Nigerian Stock Exchange, Olumide Bolumole. Good morning, Olumide. Thank you for joining us on the program. But tell us, what's the reason for this rising interest in the Nigerian debt capital market?
Good morning, and thanks for having me. Your points are very valid, and indeed, we've seen a lot of appetite from issuers to come to the market to issue bonds, some of which you mentioned. I think the key catalyst for it really is the prevailing rate environment. Previously, we saw federal government instruments trading around 15%, 16%, 14% on a yield basis. But right now, if you look at instruments that are trading up to a 7 to 8 year maturity, we're seeing yields of less than 10%, sometimes 8%. So with that backdrop, it makes for a more attractive issuance proposition for some of the companies that are coming to market to issue bonds.
Last week, we saw the listing of Dangote Cement's 100 billion naira bond on the Nigerian Stock Exchange. Of course, it boosted the outstanding non-sovereign bonds to the 1 trillion naira mark. What signal does this send to the market, and how have investors reacted to the listing?
Well, so very positive actually. Beyond Dangote Cement and some of the other issuers that you mentioned, the federal government itself has also been quite active in the issuance market. There was a sukuk that was issued a few weeks ago, and that was oversubscribed, as the Dangote Cement was bond was oversubscribed. There is a lot of appetite from the investing universe, largely because there is a lot of liquidity out there in the market, and there isn't as much opportunity. So we see that there's a strong interest for investors to find the right kind of issuer with the right risk profile, with the right pricing, for them to invest in those in that particular asset. But beyond the fixed income asset class, we are a multi-instrument exchange. And what we find is that even in the mutual fund space, we've also seen some capital move into that space as well. But yeah, indeed, there is a lot of appetite for the right kind of issuer at the right kind of price.
Now, what effects do you expect COVID-19 to have on new listings in the near term?
It's a good question. Right now, the way we see things is we are a platform to enable issuers to raise capital and for investors to deploy capital. COVID-19 is, we've seen it have a significant impact on the economy overall as things have slowed down in general. But it's affected businesses in many different ways, and it's materially affected businesses that we term person-on-person businesses. But indeed, businesses would have to adjust and perhaps rethink their business strategies in view of the present realities. So we've seen companies take on a more logistic-driven approach to client engagement, and also more technology solutions around serving their customers. In order to achieve these things, companies would actually need capital. So, and that kind of supports what we're seeing from a debt capital raising, where companies are taking advantage of the present realities and learning that they need to modify their business models, and one of the things they need to do that is capital, and that's one of the reasons why we're seeing the level of appetite from an issuance perspective. But indeed, I think what companies would likely be doing, and some of them are doing, is really rethink their strategic plans, rethink and critically look at what the requirements of those strategic plans are, one of which may be capital, and then finding the right form, the right size, the right tenure, the right structure of that capital, and coming to the platform of the exchange to raise that capital.
What are some of the ways that you're working with regulatory bodies and other players to create a more enabling environment for capital raise during and post-COVID-19?
Yeah, so at the beginning of the COVID-19 pandemic, when there was the initial lockdown, the Nigerian Stock Exchange worked with a number of policymakers, and we continue to work with a number of policymakers and indeed regulators to just try to understand some of the pain points of players in the ecosystem, from dealing members to listed companies to investors. And one early one that we saw was around how AGMs would be implemented, and working with the CAC came up with guidelines which allowed and created a framework for having an AGM in a lockdown, in a social distancing scenario. But beyond that, we continue to have engagements with the SEC. We've had rules where we've extended timelines for companies releasing their annual reports, just to take cognizance of the challenges of the environment. So we're very supportive of that. But on the technology side, one of the things that we've spent a lot of work on is the NSE's digitization process. I mean, it's not a process we started now. We've done it for many years. And indeed, we're, I think, reaping some of the benefits of that process right now. But one of the things that we've looked at, and we are currently in the final stages of putting together with the support of the SEC, is our electronic IPO process. Because previously, as you know, the IPO process was usually letter and paper driven, but we've designed and implemented a fully digital process that will support our various issuers in their bid to raise capital, and also make the process a lot easier and a lot more user friendly for investors. And it should really deepen and broaden the scope of investors participating in the market. So those are just a few things of how we're engaging just to be more supportive of the market and really taking cognizance of the present realities.
The NSE has recorded significant increases in turnover when compared with June 2019 numbers. Now, what would you say is responsible for the activity we've consistently seen in the market?
Well, I mean, it's a good point you raise. One of the things that we're very proud of is the breadth of our investor universe. We have international investors, domestic institutional investors, and retail investors. And one of the things that we've seen pre and post COVID is pre-COVID, international investors typically were around 60% of the average daily turnover on the market, and the local investor being 40% of that, split 50-50 between retail and institutional largely. Post-COVID, what we've seen is that flip has changed, where the participation is more dominated by local players with 60% of the turnover, with internationals playing around 40% of that. And we really believe that the growth in turnover, it really speaks to the resilience of the diversity rather of the universe of investors that play in the market, where one class of investor decides to, I guess, reduce their participation, another investor actually picks that up, such that, as you mentioned, the turnover this year, year-to-date basis, is actually higher than the turnover last year. I think it's about 10% higher.
Okay, Head List and Business Division at the Nigerian Stock Exchange, Olumide Bolumole, thanks for speaking with us on the program.
Thanks for having me.
We're staying with the Nigerian Stock Exchange. This time, it's time to do a quick review of yesterday's activities at the market. And I'm being joined by Mr. Charles Fakruga, stockbroker at Untitled Trust and Investment Company. Good morning, Mr. Fakruga. Thanks for joining us. Now, quickly give us an overview of Monday's performance at the market.
Hello.
Good morning, Mr. Fakruga. I was asking you to give us a quick overview of Monday's performance at the market. What drove the losses again?
Yes, well, the week just reopened, and we are seeing traders who have not traded for some time coming back to the market. What we saw yesterday is just a reflection of what has happened in the past. So, but we believe that in the coming week, things are going to really improve. We'll see the numbers improving better than what we saw yesterday.
Fingers crossed, and we do hope that we'll see that happen. Many thanks, Mr. Charles Fakruga, for speaking with us. We'll see what's happening in London as well as the debt and currencies markets when we return in just a moment. Please stay with us. Let's head to London now, where Juliana Olayinka will be updating us about today's early business headlines. Good morning, Juliana. So the latest manufacturing PMI data is out. Fill us in with the numbers.
Good morning, Bissy. Well, it's a good day for British Prime Minister Boris Johnson. The UK economic recovery story has been confirmed with this IHS market composite data of PMI, which really tells you what the economy is looking like in June. And it's risen significantly to 47.6 in June from 30 in May, which is a massive leap. In fact, I think that this has been replicated across Europe. I know some of those countries received their PMI data this morning, and as soon as that data was out, we saw a rally across all sectors, really. Brent crude rose, sterling rose, and the FTSE all-share rose. Services, which is a major part of the UK economy, GDP, it rose to 47 from 29, and manufacturing is now above 50 to 50.8, 50 being that important, significant benchmark, which tells the difference between contraction and expansion. So this is a major story, particularly as we are going to be hearing later on in the day from Prime Minister Boris Johnson about the hospitality industry and just whether or not he will be scrapping what for some is a controversial 2-metre social distancing rule. And what economists are now factoring in is that if indeed on July the 4th, pubs, bars and clubs will be open again, then we could in fact start seeing a rise in GDP and some growth in the UK from the third quarter, which which does signal to what Andrew Bailey, the Bank of England governor, said during his minutes after the MPC meeting took place on Thursday, which is they've been looking at the data forensically, and the sharp rise in economic activity is on the horizon. So it may be. Of course, there are going to be some caution, and there are some economists that are saying this is great for now. It does show that Britain may indeed be bouncing back, but what comes in the long term? How is the long-term recovery going to be played out? Because, of course, and again, I've been speaking about it a lot on this programme, that furlough scheme, that really kind of worldwide heralded scheme where the British government are paying 80% of people's wages, that is soon going to be tapering off. First, it will be 60%, and then in October, it will be erased. Will there be mass redundancies after that? But so far, so good. The rally has been really strong this morning following that release of data.
At least some good news there. Now, the UK head of the London Stock Exchange has been appointed the chief executive of the Financial Conduct Authority, making him the first leader of the UK's city regulator. Is the market in any way happy about this development?
Well, no response from the market, really, but it's a major role. And Nicol Raffi is just 40 years old, so it seems to be a major milestone. But he has got pedigree, and according to his former colleagues, he's a super brain, the man with the plan, the man who was always meant to be the FCA chief. And in fact, some people are already tipping him to be the successor of Andrew Bailey. Andrew Bailey is, of course, the predecessor of the job that he's going to be doing, and really what Ratty is going to be doing over the next 5 years is looking at the way industry and government look after businesses in the light of the pandemic and, of course, Brexit, which is going to start creeping up again in the next couple of months. He was a former aide for Prime Minister Tony Blair and Prime Minister Gordon Brown. He then went on to work in the Treasury for about 11 years at a very high-level senior position. And Rishi Sunak, the Chancellor of the Exchequer, has made this appointment. So he'll be on a 5-year term for £500,000 a year. But like I said, he's well thought of amongst the industry, and he's likely to do a good job.
All right, we'll see how that goes. Now, energy customers face bailiffs as Ofgem is allowing debt collecting again from July. Why is the regulator diving this order now? That's weeks after calling on energy suppliers to offer help to customers who are facing financial pain due to the COVID-19 pandemic.
Well, Ofgem, the industry regulator, they think it's about time. Of course, I believe everybody knows that you cannot put your bills on hold forever. And so what they're saying is that they think now is the right time to do it so it doesn't cause undue debt and burden for customers in the long term. As you said, due to the COVID-19 pandemic, there were many sectors of industry that decided to give some customers who were struggling to pay their bills a holiday. And believe it or not, it's actually been 3 months. So now Ofgem has written to energy suppliers saying it is about time that they start claiming their money back. Of course, there are critics that are concerned about bailiffs. We've got a long history of turmoil in this country about bailiffs, particularly their heavy-handedness. And over the years, the way they have been trying to chase for money from some customers has been regulated by the government, but they will be able to be back banging on people's doors if you haven't paid your bills or provided at least some sort of promise to pay with the energy regulators. So at the moment, this is only for energy companies. So there is still a payment holiday in place for local council tax and other sectors. But Ofgem realised that it is about time that these energy suppliers start clawing back the money that they're owed.
Thanks again, Juliana. We'll see you again later. And back home at the debt and currencies market, the head FX trading and FBN Quest Merchant Bank, Ajibola Ero Phillips, joins us now. Good morning, Ajibola. We saw the Treasury bills market close on a mixed note yesterday as tight system liquidity hampered participation in the market. But is anything likely to change today?
Hi, good morning. Sorry, I didn't hear that properly. Line was not so clear.
All right, I just did a quick recap of yesterday's activities at the Treasury bills space. Now, we closed on a mixed note as tight liquidity hampered participation in the market. So the question is anything likely to change today?
It's pretty much same of the same today. Liquidity is still slightly tight, although we expect some ease later in the week. But the market is largely, tight, and but rates are still really low in terms of yield. And that's just because there's not a lot of alternatives for investors to invest their excess cash that they have right now. So I thought this morning the market is really, really quiet. Not a lot is happening in the fixed income space just yet.
Let's talk about the currency market. Now, of course, we saw the Naira strengthen at the INE window to 386 Naira per dollar yesterday. What's the state of demand and supply at that end of the currency market now?
Demand is still quite huge. We have so much demand chasing just very little supply. In the R&D market, most of the supply has been coming from local non-bank corporates, and that has kind of helped provide some sort of liquidity in the market. But make no mistake about it, there's still a lot of demand pressure in the market right now. And then that's why we opened slightly a little better than yesterday. The market opened at 386. But that's really, really soft right now because of the demand pressure that is prevalent in that higher market space.
Well, do we have any idea what direction the FX markets will be heading today?
Because of the fact that supply is far out, we expect the same of the same. Naira might depreciate slightly again today, and that's just because it's just that demand in the INE market. There's a lot of FPIs waiting on the wings to exit, and then there's local corporate as well that are trying to fill some of their import requirements through the INE window.
But just before you go, Ajibola, what's the Naira trading at as at this morning?
So the market is opened around 386 Naira to the dollar. But then we've seen demand from FX users up to about 387 and above. But it's still really soft right now at trading around the 386 to a dollar just yet.
Head FX trading at FBN Quest Merchant Bank, Ajibola Ero Phillips. Thanks for sharing some of your time with us.
Thank you.
And that's where we wrap up today's program. Thank you for watching. I am BC Adebayo.